Good morning, everybody. It is Friday, July the 31st, and here's what is on our agenda. Amazon results confirm a strong quarter for cloud companies. The Kospi ends July on a high after a furiously volatile month, leaving hedge fund situational awareness counting the losses. And surprise yen intervention sets the stage for a not-so-surprising BOJ hold.
Yeah, I'm going to get to the press conference very, very shortly. We'll talk about that in just a moment. Let's talk about that volatility that you mentioned, Anna, and show some examples of it. The Kospi. This is an index, right? I know it's not an index, it's two stocks, but it's an index in theory. Kospi is up by 18%. 18%. That's an index. It's up by 18%. Yes, it has the whiff of an ex-cat about it, but nevertheless, it is up by 18%. We'll talk about the impact of that. Dollar yen is up by 0.6% What was all that intervention about? What was the market check coming out of the United States all about? We'll talk about that when we get to the press conference of the BOJ. Euro Stoxx 50 futures actually quite positive coming into the end of the month. We're up by 0.8%. Earnings a big factor in that narrative, and we'll deal with the details of that as we work our way through the morning. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. Oh, we're nearly at the end of July, Friday the 31st of July. I know there are 31 days, but always 31 days, but this feels like longer than the average July for some reason. It's just gone 7 o'clock here in London. It is Friday, and we are taking stock of what has been an incredible week for technology in a number of ways. We've learned a lot about the types of AI that the market wants to see CapEx spent on and the types of AI it doesn't. And broadly speaking, Guy, it seems that cloud is in favour, and it seems that if you can prove you've got some revenue coming in, that's in favour as well. Those are the types of AI spending that the market seems to be able to tolerate, and I offer you Amazon as the example.
We should just call it AWS, because that's really what we're talking about here. AWS. Revenue, fantastic. The revenue line is sensational, plus 37%. That's a really great number. The problem is, though, compare and contrast the cash flow out of AWS and Apple. Apple got dinged last night. Amazing free cash flow. Amazon, not so amazing free cash flow. In fact, a huge drop in free cash flow. But the top line is moving, and the market, that's all the market needs right now. So at the moment, it's not focusing on the cost of that top line. It's just focusing on that top line.
Yeah, they're getting the revenues in. And to your point about it being just AWS, most of the profits at Amazon now come from AWS, which is also an incredible fact when you think about where that business started and what it meant for high streets all over the world. In terms of the Apple story, then, of course, this is an example of the other tech theme, which has been higher memory costs, and that's pushing up prices for Apple. That meant that they had to push up prices, of course. They do report that demand is better than expected for some of those products, but they also report that there will be further delays to some of the deliveries going out into the future. And this is the last quarter for Tim Cook as he hands over. I do think it's worth, as we're talking about technology, worth marking what happened with Microsoft yesterday. We talked about the details of the earnings report in session or in our show yesterday, but it made history. This stock made history, up 16% in session, which in itself is not a historic percentage, but adding $450 billion in market.
See, I was going to include that in the next segment, which is insane volatility.
Yes.
And in some ways that
also valid there.
Precisely, it fits. So I think it fits with that narrative. You're just getting these uber swings. Microsoft is still down quite significantly over the last few months, but you get this massive pop in its stock price because actually its cloud division Azure has done better. There are many more examples. There are many more extreme examples. Look at the Kospi's up 18%.
In a day.
In a day. It's up by 18%. If you take a look at the week, though, we're still down on the week, which tells you an awful lot. You can be up 18% today, and I think on the week it is either, actually, when I checked this morning it was down, but I think we were only up by 15-16% at that point, so maybe actually we're flat. But nevertheless, it has been a wild week for the Kospi, and it is absolutely extreme. There are other examples. You just go on and on and on and look at the examples of some of these wild swings at the moment. This is not a normal market. This has not been a normal month by any stretch of the imagination. And you can see that in terms of the chart. You can see there, look at the right-hand side of it. Take a look at just in terms of the performance of other markets as well and the extremes that we've seen there. And that takes us on to the situational awareness story. And Leopold, what a great name. Leopold Aschenbrenner, the boss of that business, who basically has had to sell huge chunks of his business because this was effectively an AI fund. It's made massive gains, but some of the drops that we've seen recently have caused it effectively to see some of those positions go significantly underwater. These are the kinds of blow-ups. It's not a complete blow-up because it might actually end up as a going concern. But it had to sell huge chunks of the portfolio to Ken Griffin. These are the kind of moments that cause funds like this, glittering funds like this, to go completely the wrong way. And it's just an example of leverage. The amount of leverage that is in the system is massive.
He's a fascinating character, isn't he? Because an AI researcher turned hedge fund manager. But it just also goes to show it's not only retail investors who get in here, it's new entrants to the hedge fund industry who are getting blown up to some degree here. So I'll offer you a counter argument for all our sort of doubts and scepticism about whether the positivity around AI continues, which seems to be filtering through this morning. This comes from Hebe Chen in one of our stories over at Vantage. And he's giving a different gloss, I suppose, to what we've seen in the Kospi today. He says, stripping away the speculative foam, we are allowing the market's real contours to surface, which I just thought was so poetic. It deserved to be referenced today. So we don't know whether the real story around the Kospi is the drop of a third that we've seen since the peak in June, or the rally of 18%, which we see today. But we'll be here for it next week.
We are still down on the week.
We're down on
1%.
We're down since the highs in June.
But on the week, we've got an 18% rally, and we're still down on the week.
Yeah. It tells you a lot about the extent of the volatility. We don't have volatility in the BOJ decision today. That went pretty much as expected. No change from the BOJ, but a lot of volatility in the yen, as we know. They did vote 8-1, and that one dissent was interesting because if they'd gone for a hike today, that would have been a vote for a back-to-back hike because they went for a hike last time. So that would have been a quite punchy call, but that's not what they did. They decided to hold interest rates. Interesting on their real assessments of what's going on in the risks in the economy. They're talking about them being balanced and not necessarily tilted to the downside anymore on the Middle East, which does tell a story about resilience, about the Japanese economy, as we've talked about in the European context as well. But maybe I'm burying the lead because the real story was around intervention in the yen, which came in US time, and the finance ministry saying we are getting more than just moral help from the United States. And Scott Besson now with some very positive lines about what the Japanese are up to.
So, Scott Besson's been talking about the fact that he thinks the yen is undervalued. We understand that the New York Fed, at the behest of the Treasury, may have done a market check. Now, that's not intervention. That's just ringing people up and going, so what do you want to buy this stuff at? Or what would you sell this stuff at? But nevertheless, it implies that there is the US backing. But why?
Yeah.
What was the point? I don't understand what the point of that was, given the fact that we are now effectively in a world where the market's signalling and saying, if you want to stabilise the situation, you've got to start raising rates. And the BOJ didn't do that.
And a lot of the guests we talked to, say that the BOJ is the thing that is holding back the currency, and that's what needs to happen. Interesting that 60% of BOJ watchers are telling Bloomberg News that the Prime Minister Takaichi could be the blocker here, could be the barrier here, the reason that rates aren't going higher. So we'll see what the Ueda press conference delivers, because that's going to be important, and that looms on the agenda.
20 minutes' time, just over 20 minutes' time. What else is coming up? NatWest is just out with numbers. Q2 pre-tax operating profit looks like it's beaten. It looks like the bank has boosted its full-year outlook. We are going to find out all the details. Paul Thwaite, the CEO of NatWest, is going to be joining us shortly. Clotilde Langevin is the Credit Agricole CFO. Many things to talk about there. What is going on with the French economy? What is going on with the politics? What is going on with the wildfires? What is going on with equity trading? Eleanor Taylor, your leader, co-head of Global and Swiss Equities, is going to be joining us. We'll look forward to seeing her a little bit later on. And Victoria Clark, Santander CIB UK Chief Economist, joining us a little bit later too.
Let's look ahead to some of the other things that we're watching out for today. 9 a.m. UK time, we get Italian consumer confidence. We get Euro area CPI at 10 a.m. UK time. 12:15 UK, we get to hear from the chief economist, Hugh Pill, who speaks at the National MPC Agency briefing. Now, one of the hawks, of course, on the MPC and not on that panel talking at the Bank of England yesterday. So it'll be interesting to get his perspective. We also get US earnings from Chevron, Exxon, and ExxonMobil. So an interesting moment to mention what we've seen on oil then, Guy. We've got oil logging a 20% jump in the month of July as war, of course, festers is the word used by our colleagues at Bloomberg News, and that does seem to be perhaps appropriate because we had the MOU, which brought about some kind of peace agreement in the short term, paving the way for a longer-term peace deal. But then we saw tit-for-tat attacks taking place, and then a pause in that and a return to that. Anyway, where are we? It seems that we've got a trickle of vessels still going through the Strait of Hormuz, and the Saudis discussing forming an alliance to try and protect navigation in the Red Sea. So we're still worrying about a couple of different geographies here.
But it goes back to volatility. It goes back to two things. It goes back to volatility, extreme volatility, up, was it 21%? in the month?
20%.
20%.
Oil, yeah.
Okay. That's quite volatile. And inflation. This is inflationary. I was listening to Paul Sankey actually yesterday on US TV talking about we're looking at the wrong thing when we look at the Brent price. And it takes us back to the conversation we had with Shell yesterday, talking about what refining is looking like at the moment. They're running at 100% plus in terms of their refinery capacity at the moment. Getting product to market, petrol, diesel, jet fuel, etc. That's where the real bottleneck lies right now, particularly as we take out more and more Russian capacity.
And as we work our way towards those US earnings in the oil space, interesting to bear in mind the question you asked Wael Sawan, which was about, well, okay, if you're refining to that degree right now, what does that mean for maintenance and refining ability in the future?
At some point, you're going to have to fix these things. He says, I know my plants quite well. We're going to be able to manage them quite well. Therefore, actually, don't worry about it too much. Anyway, let's return to the AI theme next. Models going rogue. Anthropic says its models breached 3 organizations during a cybersecurity test, which went a little awry. This is becoming a theme, isn't it? Remember that rival OpenAI disclosed a similar incident. We will discuss next. Plus, we're going to return to the airline theme. IAG, and British Airways, Iberia, etc. Missing estimates. The British Airways co-owner continues to be tested by that rising fuel cost story we've just been discussing. More insight on that story. Plus, we're going to come back to the NatWest story. NatWest earnings crossing the wire this morning. Paul Thwaite is the CEO. Looks like the numbers are pretty good. We'll come back to that. You want to join in any of these conversations? Honestly, join us around the table this morning. IB Plus, BBTV Go is the function. We'll see you in a moment. This is Bloomberg.
Not only is it a record second quarter, but it's also a record first half for us. But what's extremely pleasing is you mentioned the significant beat on investment banking, but actually we had record flows from asset management, almost 9% growth from our private bank. Our corporate bank is continuing to show signs of progress, which we assumed.
What we did within the investment bank, we also shifted some capital from the fixed income businesses to the equity business to help them. But our focus is really, which I also believe that the numbers are very strong because they are mainly driven by intermediation activities. And rather than deploying capital in prime brokerage.
Our top line income of £8.1 billion is up over £1 billion on the same number last year. Profits of £3.3 billion are up 30% over the previous year. And the investment bank, as you say, has done extremely well, including my colleagues on the equity trading floor behind me.
Senior executives from Europe's biggest banks speaking to Bloomberg about a strong quarter of earnings. And we continue to watch the banking sector then, Guy, this morning.
We do. NatWest is out with numbers. Pre-tax operating profit, $2.29 billion. The estimate there was 2.01. I would call that a significant beat in terms of the return on capital employed. Full-year ROTE target. Now seeing the bank sees that at plus 19%. Previously, 17%. The market was kind of all the way there. The estimate was 18.8. So basically, this is a bank that is strengthening its guidance for 2026. Joining us now, Paul Thwaite is the CEO of NatWest. Paul, great to have you on the programme. What gives you the confidence to raise that guidance?
Hey, good morning. Yeah, a very pleasing set of half one numbers today. The numbers show that we're delivering for customers and for shareholders. As you alluded to, strong returns, profits are up 20%, and we've announced an increased dividend by 26%. What gives us the confidence to strengthen the guidance really is the strong performance of our 3 businesses. I'm delighted that all 3 of our businesses, retail banking, private banking, and our corporate bank, are performing and growing really well. They're also becoming more efficient. So that's a virtuous cycle. We're driving a lot of capital, and that's driving great returns. I think we're very well positioned in terms of the structural growth drivers in the economy. And that's really what's given us the confidence to talk to, I guess, a better set of 26 numbers than we originally anticipated at the start of the year.
Why does that momentum stop there, Paul? Is all the good news in now? Is this as good as it gets?
I don't believe so. I'm delighted with the momentum that we've got. You can see that all 3 businesses and their balance sheets are growing. We see really good demand in the economy. You can see our lending performance in terms of our corporate bank. significant increase in the first half of the year. We've got good line of sight with the biggest corporate banks. We've got good line of sight on the pipeline. So we can see that continuing out through 26 and into 27. Likewise, in our retail business, we've got good line of sight on pipelines. So I think as we continue to drive growth and structurally higher returns and make the business more efficient, that will support earnings, not just during 26, but out through 27 and 28. So I feel confident in where we're positioned as a business, not just for the short-term performance, but also for the medium-term performance, looking out for several years.
Paul, good morning. You've talked in your release today, or there's a note here that says that operating expenses of £300 million relate to the Evelyn deal. What is that cost related to, and how has that deal been progressing for you?
Yeah, good morning. Yeah, you can see in the results today, the private bank and wealth management business is performing really well organically. Record net inflows, 45,000 customers investing with us for the first time. And as you referenced, we completed our acquisition of Evelyn Partners last month. That gives us unmatched scale and capabilities. So we're very pleased to combine that with our existing private bank. The cost numbers, it's very simple. It's just in effect incorporating the run rate costs of Evelyn into our guidance. We've done the same on the revenue side. We're a month in. The integration is going well. I'm very excited actually about the scale and capabilities we now have. We have the largest employed advisor network in the UK. We have very deep client relationships. We have a digital investing platform. And I do think as we look out over the next 3, 5, 10 years, it's going to be a defining decade for financial advice. So to have the capabilities to support customers as they plan and invest for the future is really important to us. It also creates a bank that's growing at a faster rate, but also growing at structurally higher returns.
So you say it's going to be a defining decade for advice, Paul. Yesterday we spoke to Charlie Nunn over at Lloyd's, and he was telling us about the AI Invest agent that they have launched, which will be able to give advice to all UK customers around investments. Where is NatWest on that push?
Yeah, I think that's going to be an incredibly important feature of both financial advice and wealth management going forward. We have an AI financial assistance. Personally, I think that AI will be a real accelerator for savings and customers. I think it will bring a lot of value to customers. It'll allow them to do research. It'll allow us to provide great insights to customers and actually free up a lot more time for financial planners and wealth advisors to do what they like to do, which is to spend time and really get a great understanding of what customers want to do, whether it's planning for their retirement, whether it's planning to pass on their wealth to their children. So I see AI as a real accelerator of the wealth management business, and we're excited about the opportunities it presents.
Okay, can I take that, Paul, put it together with some of the other things you said as well? You like where the business is. You like the medium-term momentum that you have. You like the kind of the profit profile that you're looking at over the next few years. You think AI is going to do some heavy lifting. You've bought Evelyn. So now what? Are you now in the position where... And I'm going to bring the kind of the buyback and the dividend and all that sort of stuff into this as well. Are you now at the point where you think you've done enough on the M&A front in that space? Could you see yourself doing more? The Evelyn Partners, kind of the initial reaction was actually fairly negative in terms of the share price. Are you now in return money to shareholders mode and return in investment and put money to work in the business mode rather than acquisition mode?
Yeah, I think it's a good question. I think what we've done is put the business in a great position. What we've created with the leadership team is 3 businesses that are growing and are scale and are really well diversified. All our focus at this time is on integrating Evelyn Partners. As I said to the previous question, we see great opportunity there. We're committed to the ordinary dividend at 50% of profits. And what I've said today is we're also committed, as we have done for the last couple of years, to returning surplus capital to shareholders. So I think we've given a very clear steer about where we see our priorities, which is 1, integrate Evelyn, and 2, make sure that we return surplus capital to shareholders. And we think that has been previously well received and will continue to be well received.
OK, so that's the strategy. The context politically is changing a little in the UK, Paul, and I wonder if you are, I'm sure you're quite excited about the prospect of growth in every postcode, which is the catchphrase the new Prime Minister likes to use. Are you also apprehensive about the possibility of higher taxes on banks?
Well, first of all, we wish the new Prime Minister and the new government success, both domestically and internationally. I think that's really important for the UK. I have been encouraged by the early messages on growth about every region and every postcode. I've also been encouraged by what the Chancellor has talked about and the role he sees for financial services in supporting that growth. I won't comment on or speculate on different policies. What I have said consistently over the course of the last couple of years is that strong economies need strong banks and vice versa. And it's really important we have policy certainty and stability so businesses and investors can plan on a sensible basis. My role and the bank's role is basically to partner with government. So whether that's building and subfinancing infrastructure, whether it's helping SMEs or whether it's helping people get on the housing ladder, that's, in my view, where we should be using our capital.
Thank you very much. Thanks for joining us, Paul. Really appreciate it. The CEO of NatWest, Paul Thwaite. Thanks so much for being with us. Let's just go to another UK corporate where we're getting some breaking news coming through. BP out with some announcement at the top of the hour saying they are going to market their North Sea business for potential sale. The North Sea business is better positioned as part of another company. This pretty big action from the new CEO over at BP and ahead of the earnings which are coming next week, and all about getting the balance sheet back in shape, I suppose.
But also about the politics of the UK, you could argue, in some way, because this has been a very controversial point in terms of where this new government is going to sit in terms of drill, baby, drill, effectively, in the North Sea. OK, let's talk about what else you need to know this Friday morning. Anthropic says its AI models breached the security of 3 organisations during a recent cyber security test. It comes a little more than a week after its chief rival, OpenAI, disclosed a similar incident. In a blog post, Anthropic says it found 3 instances in which its Claude model accessed the internet and then hacked into external organisations. President Trump says his US-led Board of Peace has reached a deal for Hamas to disarm. But there are questions about the extent of the agreement and when it will take effect. Officials said details of the deal would have to be refined over the next couple of weeks, with progress expected in the coming month or two. And the Spanish government has ordered an emergency military deployment to one of the country's 2 North African enclaves. This after thousands of illegal immigrants entered over recent days. Spanish media have reported that thousands crossed into Ceuta on Thursday, many by sea. Ceuta and another Spanish enclave, Melilla, serve as the only direct land connections between Africa and Europe. The border crisis has drawn scrutiny across Europe, including a threat by the Italian Prime Minister, Giorgia Meloni, to suspend the EU's freedom of movement agreement with Spain. Spain takes a very different tack when it comes to immigration at the moment, recently effectively legalising around 1 million illegal immigrants, effectively codifying them into the system. And you can see it in the economic data. The demand curve has shifted right, the supply curve has shifted right, everything is moving, and the Spanish economy is benefiting, at least at a top line level, maybe politically a different story.
Yes, from migration and from money from the EU. Coming back, we will get back into the bank earnings story, and Credit Agricole is going to be in focus. We will speak to the Deputy General Manager and CFO. This is Bloomberg.
Welcome back. Let's take a quick look at the markets, just figure out exactly what is going on this morning. This is what the futures picture looks like. We have a generally positive picture across much of Europe. The Euro Stoxx 50 in particular, as you can see, and we'll dig into the details in a few minutes, is rising quite sharply this morning. We're up by, let's call it nearly 1%, 0.9%. The bond market is just beginning to open up here in Europe in terms of the picture that we see there after the significant volatility of the last few days. I see yields going lower just once again. It's interesting that the UK yield dropped sharply sharply yesterday, particularly at the front end, and we'll come back to the Bank of England a little bit later on. But this morning, little moves at in the European bond market.
We are watching live pictures coming to us from Japan. The BOJ Governor Ueda delivering his opening remarks ahead of the press conference. So for the next hour, Guy, we'll be keeping one eye on this, won't we? And to listen out for if he gives any suggestion of the cadence of rate hikes that are going to come. Because we had that story, was it earlier this week? It's been a very long week. But earlier this week, I think, that said that the BOJ is prepared to move faster than the market expected. But the market expectation is still only one hike every 6 months. Is that fast enough to stem the drop in the yen, which intervention doesn't seem to be able to stem? This
is the problem. And it was... I'm still trying to work out the sequencing. Why do intervention just before this event takes place?
Maximum surprise is the only argument I've seen that, to answer that question.
Oh, and why get the US involved? Why expend that firepower now? What were they trying to achieve? Maybe we'll get some answers out of this press conference.
Yeah, absolutely. So no doubt he'll be asked about the growth picture in Japan, the extent to which the weakness in the yen is making the inflation story more challenging as well. That's an interesting dynamic that we need to watch also. So we're watching that. I mean, whether he'll comment on what the Americans are doing with regard to currency, I don't know.
But why do it? What was the purpose of that? I don't know. Maybe you just try and... Maybe you're just trying to manage expectations. Well, even if you're trying to manage expectations into the event and into the press conference, why would you do it? Why would you go so hard? I'm really scratching my head.
We will see if we get any answers. So that's the BOJ. That's one thing we are keeping an eye on. We're also watching, of course, the bank earnings story. We've already talked to NatWest this morning. Let's talk about the French banking sector. Crédit Agricole has reported better than expected results for the second quarter. Income rose at its French retail business, while its asset management arm reported a record profit. We're joined now by Crédit Agricole's Deputy General Manager and CFO, Clotilde Langevin. Clotilde, very nice to have you with us. Thank you for being with us on the programme. So one thing that has got a lot of headlines, a lot of attention over the last quarter for banks on both sides of the Atlantic has been trading revenue. What can you tell us about how Crédit Agricole has performed there and how it stands up to its peers?
Well, we've performed very well in the CIB more generally, and indeed in investment banking, where the growth has been more than 60% this quarter. Fixed income and commodities were stable. But what's interesting is that we have a very balanced mix in our CIB between capital markets and investment banking and structured finance and financing, which was also very strong. And so, in fact, we had a very strong set of results overall, thanks to very dynamic activity everywhere. I just talked about equity and trading, but we had record inflows in insurance, record levels of assets under management in Amundi. And in France, we had a very strong loan production and very high net interest income. And so all in all, we reached record revenues, 7.4 billion euros for Crédit Agricole SA, growing by 7.7%. And this allowed us to post very strong gross operating income growth of 11.4%. But we're also very profitable because our cost-to-income ratio decreased and is now below the target that we had set in our medium-term plan, which is 55%. And the return on tangible equity is at 14.3%. And this allows us to pay an interim dividend on the 15th of October of 57 cents per share.
OK, Clotilde, that's a nice introduction to the performance over the last quarter. Can I ask you about mergers and acquisitions across Europe? Because this is a really interesting period for consolidation in the banking sector, in particular cross-border. So you have a stake in Banco BPM, 29.3%. And we know that there's an attempt, of course, there's press reports, actually, that Monte dei Paschi and Banco BPM are trying to explore a possible merger. And we already know that Intesa Sanpaolo has a takeover bid on the table for Monte Paschi. So I wonder what it is that you're looking for in terms of consolidation within the Italian banking sector. Are you backing a merger of Monte Paschi and Banco BPM?
So Italy is really a strategic market for us. It's our second domestic market and represents 20% of our net income for Crédit Agricole SA. So it's very strong and we want to continue growing growing organically through our retail bank, but all of our other businesses also are present, growing through partnerships. And also we have a strong and long-term partnership with Banco BPM. And so that's also why we increased our stake to 29.3%, which are fully acquired shares. So we have a strong position. So there's lots of scenarios on the table, all of the scenarios that you're talking about. So we are key to the setup, thanks to our 29.3% position. We're not necessarily going to be the ones who are going to decide, but nothing can be done without us, and nothing can be done against us. And for us, the priority
so do you not have a preference,
is to remain
so does the business have a preference?
We, as of today, have not received any concrete proposal regarding, for example, the scenario of MPS and Banco BPM that you talked about. For us, what's really important is to continue to develop in the long term in Italy, which is a strategic market for us.
Clotilde, just one more follow-up on this. So why don't you just buy it? Why don't you just buy the rest of it? That's the bit that I'm curious about here. If it's so important to you, why doesn't Crédit Agricole just step up?
What's important for us is the whole setup that we have in Italy. We don't only have this participation in Banco BPM. We also have Crédit Agricole Italia. We have more than 6 million customers in Italy, and we have all of our businesses. So we also want to grow organically. Now, as of today, we have not asked the ECB for the authorization to take control. So our situation here is a strong, stable situation, which allows us to be a key player in this setup on which we're not going to decide upon everything.
Can I just ask a question which kind of is related to what is in the news at the moment? Is it possible, at this point, given the fires are still raging, for Crédit Agricole to get a number, a vague number in terms of what this is likely to cost the business? How? And I'm wondering through which channels you think the effect will be greatest.
You're talking to me about the wildfires, right, in France? Is that what you're talking about? Sorry, I didn't get that. Yeah, okay. Right. Yes. So, in fact, today, our main priority is just supporting the victims and the communities and our employees. So what we're putting in place today is a certain number of support measures, loan payment holidays, zero interest emergency solutions, support plans for businesses, and a 2 million solidarity fund. So that's what we're working on right now. Now, down the line, what's going to be the impact? It's probably going to be lower for us than the impact of the first quarter storms, but that's the direct impact. And there will probably be an indirect impact, which will probably have a more important impact on the regional bank that is locally present. But today, our priority, which is always, in fact, our priority, is to continue to support our customers in the good times and the bad times. So our priority today is to provide them this very short-term emergency support.
Clotilde, what bearing does the presidential election in 2027 have on the business? Clearly, it will possibly continue to impact French assets. But in terms of the structure of your business, the vulnerabilities of your business, how are you thinking about the election next year?
Right. So the election creates uncertainty, undoubtedly, in France. Now, we have a group that is very present in France. Crédit Agricole SA has more than half of its revenues outside of France, but we are naturally, for example, exposed to French debt, naturally. So France has strong fundamentals, a diversified economy, strong fundamentals in terms of energy, of tech, etc. And we know how to support our customers in uncertain times. This is what we have been doing for years. And we know how to support our individual customers, providing them with solutions in terms, for example, of savings. We know how to support our corporate customers, helping them diversify, helping them hedge, for example, against uncertainty. And more specifically, our exposure to French debt is large, naturally, because we're a natural French player, but the exposure to volatility is very limited due to the accounting that we put in place for our banking exposure and our insurance exposure. So we have the solidity needed to maintain strong growth. We have strong drivers of performance down the line within this uncertain environment.
France is trading 78 over Germany at the moment. We'll certainly keep an eye on that number. Clotilde, thank you very much indeed. Always appreciate you bringing us the details of the numbers and the outlook. Clotilde Langevin, the Credit Agricole Deputy General Manager and, of course, CFO. What have we got coming up for you? We're going to come back to the volatility story. A hedge fund started by a 20-something former OpenAI researcher becomes the latest casualty of the AI sell-off. Details to follow. This is Bloomberg. 15 minutes ago until the opening trade here in Europe. Broadly, we look positive. We are being bombarded, though, by news this morning, particularly on the tech front. We'll come back to some of it a little bit later. One story that is kind of adjacent and related is what, of course, is happening with situational awareness, the fund that has captured so much attention over the last 24 hours. Ken Griffin's Citadel, the giant, has swooped in to buy the bulk of the AI stocks held by situational awareness. So this, remember, was a fund, a hedge fund, opened not that long ago by a former OpenAI researcher. I've seen various descriptions of it this morning, one of which is the Nostradamus of AI, which always ends well. Leopold Aschenbrenner started the hedge fund 2 years ago, despite having no investment experience. Now its assets have plunged in the course of a month, obviously because of the massive AI sell-off that we have seen. It may end up still as a going concern. We don't know what's the ultimate kind of endpoint for this fund, if there is one. Anthony Stevens joins us now to talk us about what this means. Anthony, I don't want to get into the details of the fund and what has happened here and what's happened with Ken Griffin. What is the takeaway? What is the big picture takeaway that I should look at from this story? Huge volatility, lots of leverage. Is it just inevitable that we are going to see funds like this getting into trouble?
It teaches you that even a bona fide AI investment genius cannot mix leverage and volatility to this extent. That is the lesson. This man created a hedge fund worth 10 to 20 yards from a 225 million start. He's under 30 years of age. He's written a seminal paper on AI. He has the intellectual chops as ranking with anybody else on this trade. Unfortunately, at the very top, he had a lot of leverage. He had a lot of complicated positions, a lot of options positions. And into the pace of technology change, he got hurt very badly and margins were called. That is the takeaway here. The pace of change in the AI trade, the volatility you're seeing on both the pure flow side and the technology side, and this rotation between hyperscalers and semiconductors is catching even the best off guard. And now we're seeing volatility to the upside. You're seeing Korea have a record pop here, up 18% on the close. So this kind of volatility, as we've been speaking on multiple hits, determines the size of your positioning. You cannot have huge positions into this kind of volatility. So until things calm down, we are more in a tactical trading market with regards to the AI trade, as opposed to the absolutely structural bullishness we were having before. That is something investors will need to adjust to, given the popularity and prevalence of the AI trade in everyone's portfolio globally.
Anthony, thank you very much. Bloomberg's Anthony Stevens bringing us this story around an AI-related blow-up. We will certainly be on the lookout for more. Turning to tech more broadly now, and quarterly results from Amazon and Apple have capped off a big week of earnings. Apple tumbled more than 6% in extended trading as supply shortages hurt its sales forecast. Meanwhile, Amazon jumped in late trading after reporting a fifth straight quarter of cloud revenue growth. So there's the contrast between the two, and you can see the contrasting moves after hours between the two on your screens now. Let's bring in Bloomberg's Neil Campling, who tracks technology stocks often for us here on the opening trade. And Neil, what were the key takeaways for you then from these results? We'll come to Microsoft perhaps in a moment, but a real contrast. If you're in cloud, you were rewarded, it seems, this earnings season.
It was, if we look at the replay, I suppose, really, with Amazon compared to Microsoft the day before, because the cloud business, clearly the most important metric for growth, came in above expectations. AWS grew 37%. The fastest growth year-on-year growth quarter since 2021. So that kind of validates, if you like, some of the massive CapEx spending which is going on. And they raised that CapEx guide last night. And that, if you like, has overshadowed any concerns around free cash flow, which was negative in the quarter, over $8 billion of negative free cash flow. And is also, the price action probably reflects if you like, where we are year to date, because Amazon was only up 2% year to date, whereas Apple was up 22% year to date going into the print last night, with no concerns over that AI capex spend. Investors have been hiding out in that particular stock. But again, similar to the supply chain companies like Qualcomm and ARM talking about smartphone volumes being lower, Apple, who have the best purchasing power of any company really on the planet for the components and the memory, did talk again last night about memory pricing being higher, and that they're going to go higher still, and the supplies were tough to get. They're going to have to start depleting some of their inventories they have.
Kioxia, out of Japan, the chip company, just out with some numbers. NAND unit prices rose by 70% in the first quarter versus the previous. 70%, extraordinary numbers. Volatility is everywhere, Neil. What did you make of the Microsoft move yesterday? We're getting vol on kind of both sides. Today, you see it in Korea, obviously massive upside vol. Microsoft was an example of that yesterday. What do you make of this kind of volatility?
A lot of it probably comes back to, as you've been mentioning already on the program, about positioning around single stock volatility and dispersion, which you're not necessarily seeing in the headline index moves, but you're seeing it at the stock level. You're seeing in thematics as well. There's a high beta momentum index in the US that had a 14% move yesterday. So it's positioning. You're talking about this hedge fund, that, in terms of those positions have probably been unwound already. So pockets there that have been covered. So I suspect that the volatility is going to continue at the stock level whilst people are looking into different areas of the market. One really good thing is that valuations in the US have, the US stock premium has come down significantly versus Europe. And that's despite the fact that 85% of companies are beating estimates this quarter. So the fundamentals are still strong in that respect. The only concern on the AI trade, I think, primarily is just how big that capex is going when you have, as you say, things like memory pricing being so significant in terms of a cost.
Yeah, it's just the inflationary impact of that is extraordinary. Neil, thanks for the update. Neil Campling joining us on some of the aspects of this tech trade. There are so many. We're being bombarded. Mark Cudmore's here from the MLive team. He's the boss over there. What does he and the team make of all this volatility? Let's find out. What do you think, Mark? The Kospi's up 18%. What's going on?
It's insane, isn't it? On Wednesday, it was down 21.3% for the week. Then it had a 26% rally between Wednesday's lows and Friday's highs. This is one of the world's largest stock markets. Through the GFC, we saw some wild moves. In the dot-com era, we saw some wild moves. This is pretty insane for one of the world's largest stock markets. So a couple of takeaways. I think, first of all, Korea stock market, I think this is the long-term bottom. Look, this is high beta to the AI capex bubble. We've discussed for a while that, we're in the volatile end game of the AI capex bubble with the base case that we're not at the end yet. We think it's when the capex turns. And the earnings this week said capex is still going to increase. So you've now got to go out probably to the next earnings season, and it might be the one after that, but it's always the next earnings season you look to. So the AI capex bubble inflates. We'll see global stocks reach a fresh record high. But the volatility that we've seen in July is going to become a feature, not a bug, for the coming months. I think we're in that kind of multi-month end game of the AI capex inflation, but it's in the end game when we get the most crazy moves. But for Korea itself, I think a bottom is in. This stock market is now good value again. We've seen a capitulation from local retail. We've seen the situational awareness capitulation. So therefore, it's much fresher positioning wise, and it fundamentally is a good story.
OK, yeah, we seem to be on some massive price discovery adventure when it comes to everything to do with AI, Mark, right now. And that's a volatile place to be. Let me ask you about the BOJ. Just a couple of lines that I thought sounded maybe hawkish from Ueda, saying we need to be more aware of upside price risks than before, and saying we'll have firm discussions from next meeting on. Is the market's thinking around the cadence of hikes going to change, do you think, from anything you've heard so far from the BOJ?
No, I think the BOJ is actually a side story of this week, not just because of all the other news, but also because we had the intervention. And I think, as a couple of people have outlined, it's likely that we'll probably have another couple of follow-through episodes and intervention. If we don't, the yen's in trouble. So there's a chance they can really follow through. I think the changes in the BOJ are very marginal here, incremental, but I think that there could be more intervention in the days ahead, and that is still low down in the stories of markets this week.
Mark, somebody just written to me about this, actually. Is the BOJ's problem, are all these central banks' problems actually the Fed right now and the market questioning the Fed? And that's the real issue that they're all having to deal with. And that obviously has implications for the dollar, the yen, etc.
I think that's absolutely right. But it's weird because ultimately the Fed was very disappointing this week. It took a big blow to credibility. That should be bad for the dollar. But I'm not sure we're quite ready to start the big dollar downtrade yet. And I'm somebody who's structurally bearish the dollar. I think still has US more upside on rates, and that will support the dollar a bit more in the short term.
OK, Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Keldmore. Remember, you can get up-to-date analysis from Mark and all of the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal. Yeah, we certainly see that lingering effect of Walsh and what we did and didn't hear from him in the markets, don't we? It was yesterday's story in fixed income, if not in FX. And I've read lots of copy talking about, did we really understand what he was saying? Is the market really able to speak Walsh just yet?
But the problem is, though, that if they're not, then we've got a problem.
Yeah.
And that miscommunication is maybe something of a factor that I think the market is still grappling with. And it's a big issue. OK, 5 minutes to go. The opening trade is almost upon us. Futures are higher here in Europe. There's lots of single stocks. We'll talk about them in a moment. This is Bloomberg. Couple of minutes to go until the opening trade. I'll show you futures in a moment for Europe, but let me give you a sneak preview. They're higher, and one of the reasons they're higher is because of this chart here. Europe went out here in terms of the close yesterday. The US finished over there. You just got to price that in terms of what we're going to be seeing in terms of the equity market open here in Europe, and it gives us a nice kind of some wind in the sails, let's put it that way, in terms of which direction we're heading in, and that is definitely higher this morning. There's a bunch of stock stories as well that are going to be quite positive as well, and are going to lend some helping hands to that narrative. But nevertheless, European stocks futures, the 50's up by 0.6%. The FTSE's a little bit of a laggard this morning. We're only up by 0.2%. DAX is up by 0.5%. Some of the other markets are up actually quite significantly this morning. So there are some single stock kind of impact variations that you're going to see in terms of the narrative this morning, but broadly, nice tailwind coming out of the Asian session, nice tailwind coming out of the US session, all of that helping Europe this morning, Anna.
Yes, indeed. So we look ahead to a positive start for European trade, and let's think about some of the individual stocks and sectors that could be in focus. We'll start first with the banking sector. We've got NatWest numbers out delivering a lift to guidance, signalling buybacks after a beat on the earnings front, so all good there. It seems at the top line. Credit Agricole, profits boosted by Amundi and the French retail bank. So that's the story in the banking sector here in Europe today. On the technology front, we look at anything that's connected to Apple. We sometimes see some of those suppliers to Apple move on the day after those Apple numbers. And the Apple numbers didn't go down all that well, but for reasons to do with supply chain. So we'll see if that has an impact. And Leonardo in the defence space, orders strong, the full year outlook raised. So maybe that's one to watch this morning.
I spoke to the CEO a couple of days ago at Farnborough. Very positive momentum he certainly sees with that business going forward. OK, let's talk about this market open this morning. As we've already indicated, we are expecting a positive performance. The FTSE is likely to be a laggard. We're certainly seeing that early doors. Stock 600 is expected to be up around 0.6%. I don't have a number for you yet. We're broadly expecting Europe to go higher at a kind of top-down macro level. We've also got some single stocks that are going to add into that narrative as well. So the stock 600 is up by 0.2%. The FTSE is not quite delivering the 0.2 move we expected and we saw in futures. We're getting basically a flat open. The stock 600 is up, though, by 0.2%. The IBEX is up. The IBEX is only just up. The CAC's only just up. So where are we going to see this? Actually, I think we were expecting a little bit more outperformance initially. So there's a few key stocks that feel like they're not open yet. So it's going to be interesting to see what they are and what the drivers are first thing this morning. The DAX is yet to go. The AEX is yet to go. We were expecting maybe 0.5%. We're not getting that yet. out of Europe, Anna.
Yes, indeed. We do seem to have more sectors in negative territory than in positive, which the futures picture is sort of inconsistent with. So let's dive into a bit of the detail as to why that is the case. We do have to the upside basic resources, so that sector going up by 1.3%, Antofagasta, Fresnillo, Anglo-American, the usual cast of characters moving that sector higher. I know that iron ore prices have been very much in focus of late, but we'll leave the upside there and look at the downside, because maybe we've got a bit more downside than we'd anticipated. I can see that IAG, which you have had numbers out, it's been such a busy morning, I haven't had time to mention much, but that company, that stock is down by 4.5% on the back of its numbers. We have Accor in the hotel space and others in the hotel space, and airlines and catering companies and gaming companies all a little bit weaker. Personal consumer discretionary, grocery stores also an area of weakness. Not a standout performer to the downside, but Unilever and Tesco's are both in the mix there. So, yes, it's just not a day that's not as positive as maybe expected, although we are seeing a bit more upside in basic resources now. But we kind of split 50-50 then in terms of the sector moves.
Points. So it's Unilever. So we're getting a little bit of a mover. So what you get, there's quite a positive tech performance in Europe this morning. So ASML is up quite nicely, 2.35. Schneider's up quite nicely. Asia Brand Bavaria is up quite nicely as well. All of these are kind of adjacent AI stories, AI data center stories. You've got Unilever and Nestle as the two biggest drags on the market. Are we getting basically a rotation within the space? You're getting money coming out of the staples, the safer end of the market, and we're rotating back into maybe some of the sort of AI adjacent trades. ASML, Siemens Energy, Infineon is up quite nicely this morning. Schneider's up, ABB's up this morning. So that's the kind of trade. It's back into tech. It's out of safety.
Yeah, indeed. And we've got something like Soitec in the technology space up by 8%. So there are some pretty standout movers in the tech space. And, of course, it's been such a volatile landscape recently. Let's widen our focus and talk to Eleanor Taylor-Jolly-Dunn, who's co-head of Global and Swiss Equity over at Union Bancaire Privé, and joins us now. Eleanor, good morning to you. Nice to have you with us. So oil prices have been creating a lot of volatility recently. The tech trade has been creating a lot of volatility. And July has been marked by a lot of that equity market volatility, certainly. Are you assuming that carries on for the rest of the year, over the next few months, or, we're at the last day of July, is it behind us?
I think what we've seen over the reporting season so far has been very strong earnings results, which probably the market was not entirely expecting when you see to what extent companies have been able to beat expectations. So for a fundamental investor like myself, it's particularly encouraging to see that when you base your decisions on earnings as opposed to optimism, that is being paid off at the moment. Having said that, yes, there was a lot of hope going into July, a lot of growing questions against that hope as regards the monetization, the success story of AI going through. And there was what I think one can expect when there is a completely transformative technology, a very, very high expenditure behind that technology, a pause for thought in markets, which happened. And there may be perhaps a more critical, a more informed look going forward, which is again more based on earnings than has perhaps been the case in the more recent months, quarters.
And so where does that take us on that AI trade into the rest of the year, Eleanor? To what extent do you want to get exposure, continue to have exposure, or to avoid? And if you want to avoid, where do you look to be instead?
Well, certainly if you are a portfolio manager, what you're looking for more than anything else is balance in some way. So having exposure to names which have a decent value creative opportunity, be that expressed in earnings or what we prefer to consider the cash flow return on investment growth or stability of those companies. Now, we want to find pockets of that growth in different themes. There is a very dominant theme at the moment and a concentration concentration of the market, which has been much discussed over this year, which is around AI. But I would argue that there are other opportunities in the market, other trades to play alongside an AI trade. And one also has to be thoughtful about who really benefits at what time and how from these different themes. So we have within our portfolios at the moment exposure, obviously, to AI thematics, but we also look for companies which can play into the infrastructure spend that we're still expecting coming out of Europe. We have companies which have exposure to what unfortunately is truth, which is that demographics, certainly in the Western world, are probably moving more to an older generation rather than a younger generation. And that means that there are going to be health costs associated with that, and a willingness of us all to try and combat that in an effective way with an interest in healthcare and improving healthcare metrics.
But I don't know, how do I invest in this? Day to day, we are seeing such volatility. Do I just have to take less risk in a portfolio given that volatility? Is that just the nature of the market we find ourselves in? Can you take the kind of positions that you once wanted to? The danger of getting stopped out of them at the moment looks pretty extreme. How do you invest in a world where this kind of volatility is there every single day?
I see that the markets change in their behavior every single day, and the sources of volatility can be very different. What is different about the markets at the moment compared to perhaps other periods of volatility that we have known is the very high concentration in a few names when it is the United States, indeed a concentration that we've seen also on the US, and a willingness also to pay perhaps slightly higher valuations than one would necessarily in usual circumstances feel comfortable with in order to gain exposure to that particular thematic, which is technology, artificial intelligence. But then as a portfolio manager, we always have to be aware that things can change, and things do change very rapidly, as we saw during the month of July. Fortunately, you could say it's so far, at least it's only been a month of change. But I don't have a crystal ball exactly for the future, and what has happened over the July does give me also an indication or a reminder of what is likely to happen or could happen in the future. So maintaining exposure to themes which have genuine underlying earnings potential makes sense, but at the same time being sure that we're always balanced, that should something suddenly come out of favour, we have other areas of growth which are present in the portfolio. It isn't perfect every day, obviously, but hopefully that gives us some protection on reversal trades like we saw during the month of July.
But do you worry that investors ultimately, and at the moment it feels like we're repositioning around some of this stuff, but I was talking to the CEO of UBS about this earlier this week. His view is that ultimately investors, kind of the people that put money into wealth funds, don't like this kind of volatility. So ultimately, is it, while it's a short-term kind of, we're seeing a lot of movement, ultimately people will get much more cautious if we see this persist?
We've certainly seen people become more cautious in the past around volatile equity markets. But when you look at the valuation which people are prepared to pay for equities at the moment, when you see the performance of equity markets globally, and notably perhaps again in the United States, which is the most exposed market to technology, you could argue, then you do seem to see that a number of people continue to wish to be exposed to this market. Indeed, we've seen a pretty attractive picture in terms of flows onto equity markets. But yes, there is a flexibility around those flows. And there have also been interesting periods where we've seen quite interesting flows back into Europe, which was something which was missing perhaps over some of the more recent years, as people felt that Europe wasn't able to re-find a dynamic in terms of growth. But when you see some of the numbers and also the macro numbers which were published yesterday, you can see that there are shoots of growth in Europe. There are areas of opportunity in Europe, and also, for example, in Switzerland, which is a market that we continue to consider as very value creative and interesting. And as such, you see that there is interest for investment in equity. Whether that interest and whether the levels of equity markets are reflecting perfectly what is happening in the general economy and reflecting perfectly some of the considerations and concerns that people have around the cost of living is another debate. But clearly there is a willingness to be involved in equity markets if we look at the level of equity markets today.
And Eleanor, do you, in a way, I know equity markets is your focus, so within equities, are you interested in commodity-related equities at this point, given we have an oil price that sort of refuses to go down? I mean, it went down, but then bounced up again, because, of course, we see a persistence to the activity in the Middle East.
Well, one of the main areas of my focus is Swiss equity, and the Swiss equity market does not have a terribly high exposure, in fact, has no exposure really to commodities. So that answers part of your question. As regards our global equities, we do look certainly at companies which would be serving the commodity area. We're also aware of the importance that a lot of our investors still attach towards ESG considerations that may hold us away from some more direct exposure to commodities, but where we see an end market which has a growth potential, which is as a result of higher commodity prices, we do gain exposure to that both through our Swiss equity and through our global equity.
Eleanor, thank you very much indeed. Always appreciate the time. Thank you for joining us on a Friday. Eleanor Taylor, you're leading the co-head of Global and Swiss Equities at UBP. Let's take a quick look at the Call 6. This is what we are seeing this morning in terms of the big moves that we are watching. There's quite a comparison. Basically, tech is up. Look at ASML, up by over 3%. Nestle is down, so let's take that as being emblematic of the more staples trade, and that is under pressure. So we're rotating back towards tech, I think, is the narrative that we are watching. Banks also firmly in focus, as they have been all week. Let's start there with Alex.
Yeah, guys, look to credit Agricole this morning. Of course, got that beat on earnings, boosted by Amundi. And looking at this, out of the gate, up around 5% in the green this morning, climbing up. Let's turn, though, to tech. And this really is an interesting one. It's been a bit of a week of whiplash, I think it's fair to say, when we're looking at tech stocks. But European tech stocks opening up. You can see particularly those in the semiconductor space. And this is interesting because there was that question whether Apple's disappointing sales forecast were going to cast a shadow over Europe. But in between, of course, we had the rebound of the Kospi and the tech trade in Asia. We'll be seeing European tech stocks, particularly those in the semiconductor space, opening very much in the green, climbing this morning. Let's turn then to Siemens Healthineers, and this was a mixed picture in their earnings this morning. They are in the red, down around 5%. On the one hand, you had this windfall brought by tariff refunds, which did lift their earnings. On the other hand, there was a drag in the diagnostic space, and that was contrasting with other areas which are looking promising, like imaging and cancer treatments. But you can see this morning that mixed picture. That is pulling Siemens Healthineers down into the red around 5%. Let's just turn the board over finally. We can look to, we've got Siemens Healthineers there. Sorry, Dan, flipping that over. Yes, to Taylor Wimpey. Here we go. Now, there was a cut to the dividend here, and this is dragging them down around 5%. The broader picture this is pointing to is to a slump that Taylor Wimpey is still confronting, but that is taking them down around 5% now. So that's some in the green. European tech very much in the green. Credit Agricole in the green as well after that beat on their earnings. Taylor Wimpey, Siemens Healthineers, some of those in the red this morning.
Alex, thank you. Alex Morgan with an update, a rundown of some of those stocks on the move. Coming up, profit beats from both NatWest and Credit Agricole. We'll dive into the results from the European banking sector next. This is Bloomberg.
very strong set of results overall, thanks to very dynamic activity everywhere. I just talked about equity and trading, but we had record inflows in insurance, record levels of assets under management in Amundi. But we're also very profitable because our cost-to-income ratio decreased and is now below the target that we had set in our medium-term plan.
What gives us the confidence to strengthen the guidance really is the strong performance of our three businesses, retail banking, private banking and our corporate bank are performing and growing really well. They're also becoming more efficient, so that's a virtuous cycle.
That was the NatWest CEO and Credit Agricole CFO speaking to us earlier after their earnings reports. So NatWest raised its guidance for the year and says it will consider buybacks sooner than planned after beating second quarter earnings estimates. Credit Agricole, for its part, also reported better than expected numbers. Income rose at its French retail business and it saw record profit in its asset management arm. Let's put together what we've learned then from the banking sector this week. Philip Richards joins us from Bloomberg Intelligence, who leads the global capital markets banking team. Philip, good morning to you. Let's start with NatWest then. How did NatWest stack up against the competition? Telling a pretty positive story this morning.
Yeah, good morning. Yeah, as you say, I mean, there's been a very strong 2Q round for the European banks overall. Two-thirds of banks almost beating on revenue, every bank almost beating on cost of risk, EPS line, almost every bank outperforming. And not really any bank suffering on that front. And we've seen exactly the same today. Credit Agricole, NatWest, upping guidance, beating quite strongly, 10%, 11% PBT beats for both.
We just talk about trading and why there is this big gap between what Wall Street has produced, particularly on the equity front, and what Europe has produced this week. And it's been notable, like Barclays, into UBS, into a whole range of other banks. We have seen good performances, but not relative to the United States. Is that because all the great deals are in the United States? Or is it simply just, we are not going to give these businesses the same level of capital, they can't take the same amount of risk, and therefore they don't deliver the performances?
Yeah, I think you hit the nail on the head there, exactly. We're all talking about the beats versus consensus. But the fact is, consensus is far too low for these European banks. And as you say, the Europeans are doing far lower growth rates than the US banks are. And you say all the activity, the M&A deals, all the technology investments, IPOs are all coming through in the US. So unsurprisingly, the US are winning on their home turf.
Philip, we've been asking a lot of CEOs in lots of different sectors, to be fair, but including the banks, about return on investment from AI. And both NatWest and Lloyds talked to us this week about their wealth management tools, basically, that are going to be fueled by a lot of AI. Is this going to be a huge step change in the retail banking landscape, do we think, in terms of the products available, the access that people have to wealth management products?
Oh, it definitely is across the board in terms of the whole AI rollout. There's also a case of not everyone's going to benefit on a relative basis. So it's about controlling how much you spend. And that's a concern sometimes. Maybe the banks are spending too much and maybe not actually getting the full return on that. So there's a combination of the two. Yes, you've got to spend to grow, but actually, are you getting the returns on that?
Yeah, tokens aren't free. No. Price is dropping. Not free.
Still not free. Token maxing is definitely out. Philip, thank you very much indeed. Philip Richards joining us from Bloomberg Intelligence. Let's get into another story that we're watching. Actually, probably haven't paid attention enough to this morning, but we are definitely paying attention to now. IAG is down 2.5%. Remember, this is the parent company of British Airways, Iberia, Aer Lingus, etc. Let's find out why we are down. The stock was down more than this earlier on. We've rebounded a little bit, but why we are seeing this drop. Benny Cameron joins us now, Bloomberg's managing editor for space and aviation. Benny, good morning. Is this just a fuel issue that IAG is facing?
Yeah, so fuel is the big sort of story here, has been really across the industry for a number of months now, and it's hitting hard at IAG, as it is indeed with all the other airlines. Why is the stock down? It's down because the company is more pessimistic about its growth prospects. In February, when they reported for the first quarter, they said that capacity, which is sort of a key metric for the industry, would rise about 3% this year, and then this morning, the new word that was used was flat, so no growth. So essentially, the company has abandoned its growth prospects for the year, and they're doing that because they are less optimistic about adding routes, growing the business, and really it's about retrenching, and that sort of sends a signal that this is a generally slightly more pessimistic outlook into the latter part of the year, and that is why the stock is down.
Yeah, Benny, you might have thought in terms of the competitive landscape, that the fact that there might be reticence still to travel through Dubai, travel through Abu Dhabi, might mean that there's something to play for some of the other for the European carriers in terms of taking people to Asia. But I guess you can't turn that kind of growth plan around very, very quickly, can you? What's been the competitive landscape? What does that look like at this point?
Well, it's been very, very dynamic. You're absolutely right that there was a window of opportunity for the established airlines, say BA, Lufthansa, Air France, to push more into these routes that over the years they had really lost to the Middle East carriers. That's parts of Asia, parts of Africa, parts of India, and so on. But that pendulum has started swinging back as the likes of Emirates, Qatar, Etihad sort of regain their strength. Now, obviously, in the last couple of weeks, the conflict has flared up again, so it's really unclear how that dynamic will play out. But this was a bit of a flash in the pan, to be honest, in terms of those gains that they had. They haven't really stuck, it seems. So that's on the long haul side. On the short haul side, the likes of Ryanair and EasyJet are still making life difficult for a lot of the carriers over here. They are gobbling up more capacity. A lot of people are flying shorter routes, thinking about those long haul trips. So it remains a fiercely competitive landscape. We're going to hear more from the company at the bottom of the hour. That's when the analysts get their time with management, and they'll ask about what's going on the crucial transatlantic route in particular.
It's been interesting. Up until this point, it's felt like the long-haul carriers have had an advantage. There's been some premium in the market. People have been prepared to pay for premium seats, and that has insulated them. Can we now say, basically, that period has come to an end, Benny?
Well, it depends a little bit where you look. In the US, that still seems to be a strong theme. So if you talk to United, Delta, even American, who've struggled a little bit on the premium side, they all tell you that the premium is where the growth is, the front of the cabin. That's where people are still spending. Over here, it's a little bit more diverse. As I said, the low-cost segment remains very strong. The customer is opting for shorter routes. So that sort of creates a slightly more difficult picture for the carriers over here in terms of long haul. And they had that brief moment in the sun, pushing more capacity into Asia, but that seems to have disappeared again now.
Thanks very much, Benny. Thanks for bringing us the story. Benny Camel there on IAG. Let's check in on what's happening with Universal Music Group. They reported the stock is down really substantially today after they reported numbers late yesterday. Universal Music Group then reporting subscription revenue that actually beat analyst estimates because of price increases from streaming platforms and a busy music release schedule. But the EBIT numbers seem to miss estimates, and so that seems to be something weighing on the business.
Adidas had a pretty tough... Was it yesterday or the day before? I've lost track this week. It seems to have been one of those weeks. That takes us into Puma, which this morning is down by, let's call it 5%, on the back of the numbers that we've seen from the company this morning. What you're basically getting here, I think, is probably, as one of the analysts puts it, a clean-up operation. This is a business that is kind of going through a little bit of a reset right now, and it'll be interesting to look forward to see what it delivers going further down the road. But the market this morning is reacting fairly negatively after what has been a very tough week for the footwear industry.
It has been. Let us talk about the macro a little bit. Coming up on the programme, the Bank of England keeps rates on hold. We will discuss the decision with Santander UK's chief economist, Victoria Clark. There's a lot of change for number 10 in terms of the economic landscape. Well, that change is intended, at least. What does all of that mean, and what does it add up to? What do we know so far? This is Bloomberg. This is the opening trade, 30 minutes into today's session, and it's turning out to be a pretty positive session, actually, for Europe. Took a little bit of time to get going, but we are participating in, for what it's worth, the rebound in technology stocks that we're seeing in the Asia session, because technology is the best performing sector here in Europe today. That is playing out well for the DAX, as you can see, and to some degree the CAC 40 as well. The FTSE 100 not left behind. Basic Resources not doing too badly, and that plays well for the FTSE. So we do see a bit of positivity then coming through from the Asia session ahead of what could be another positive day over in the US. Guy, a bit of a rebound here for tech stocks, but it's quite a divided story across Europe. We've got some real standout individual stocks moving quite a lot in either direction.
And we have a fresh record high on the Stock 600 this morning, which is also probably worth mentioning as well. In terms of the internals, it's kind of 2-to-1 basically in terms of the upside versus the downside. What is the standout story this morning, though, is the volume. You are getting, you've got a kind of end of the month factor and all that kind of stuff to throw into the market as well, but you have got quite a big chunky move, big rotation being signalled by what we're getting in terms of the volume numbers. Let's talk about Polish convenience stores to start with. Why not? Zabka is being bought by Clotilde. That stock is up very nicely. NatWest on the back of the numbers that we talked to the CEO a little bit earlier on, up very nicely on the back of the numbers. You want to talk about the tech trade? I give you ASML. It's up by 3.22%. When you get ASML moving that kind of distance, you are going to get some fairly decent upside on this market. So that's basically the narrative that we're getting. Decent earnings, a bit of M&A, and a tech trade that is working. There are some negative stocks this morning, believe you me. Universal Music, that miss that it's delivered is being punished and really punished. 22% to the downside. Hensoldt is out with a miss this morning. It is being punished. It's down by 3%. Taylor Wimpey has basically kind of said that the market's really flat in terms of the housing story here in the UK. We're not going to be able to do for you as much as we thought we were going to be able to do for you investors, and that's the reaction. Taylor Wimpey down by 5% on the back of that story. So a mixed market, Anna, but certainly a market that is being driven by tech and earnings this morning.
Yes.
The upside.
Yes, absolutely. Let's get an update on some of the stories that are driving the tech narrative this morning. Amazon shares jumped in late trade after reporting a fifth straight quarter of cloud revenue growth. The company also boosted its full-year capex forecast. The CEO, Andy Jassy, saying most of that spending will go towards AI. Meanwhile, Apple forecasts lower than expected revenue growth in the coming quarter, with the iPhone maker's outlook hit by supply shortages, which CEO Tim Cook warned will affect more of the company's products in the months ahead. President Donald Trump says the US-led Board of Peace has reached an agreement for Hamas to disarm. US and Board of Peace officials said details of the deal would have to be refined over the next couple of weeks, with progress expected in the coming month or two. The Bank of Japan kept its policy settings unchanged while signalling less caution about economic growth, pointing to confidence that the economy remains on track for further policy normalization after it lifted its benchmark rate last month to the highest since 1995. And the decision came after Bloomberg learned that authorities intervened in the currency market overnight to support the yen. Guy.
Let's talk about what's been happening with the Bank of England. Yesterday we had a very nice special. We listened to the press conference. I actually thought it was quite interesting. So let's come back to it and talk a little bit more about what we've seen. The governor downplaying a future rate hike, this after the bank held rates steady. There were 3 dissents, though, to the upside. The committee said it remained alert to the inflationary impact of the ongoing conflict in the Middle East.
Please do not leave this room thinking that the Bank of England is edging towards a hike, because, frankly, there's nothing in what I said, and I think any of us have said along those lines. We took a decision today to leave bank rate unchanged, and that is the relevant conclusion.
Please don't leave this room thinking we're going to hike rates. I wonder if he actually meant to say that. That was a very strongly worded statement, a very strongly dovishly worded statement that came through from the governor. And I have to say, the front end moved aggressively on it. I can't remember, we were kind of down 2 or 3, 4 basis points kind of for the bulk of the press conference, and then we dropped quite sharply towards the back end of it. Santander's CIB UK chief economist is Victoria Clark and joins us around the table. What did you make of that?
I think he got carried away. I don't think the intention was to be quite as forceful in that message that, that we were edging towards rate hikes, because, of course, that remains a possibility, as their analysis yesterday showed. But I think, he was frustrated that perhaps that person hadn't quite understood that there's full optionality there. And I think that optionality was still the message he wanted to give. So I think, I think it probably gave too much of a dovish steer to the markets. And
so rate hikes are still possible here?
I think they are, yeah. I mean, looking at the Middle East crisis, they've clearly got a scenario which shows that if there's episodic Middle East energy shocks coming through, that you might need to raise hike rates in that scenario. But look, I mean, at the moment, they're not particularly keen to do that, but it's there, and it's certainly something that he shouldn't be discounting.
Yes, it's quite interesting, isn't it? Because another of the journalists made this point listening to the press conference yesterday, that the people at the table yesterday were all people who'd voted to keep rates on hold, but there were these 3 dissenters. Was there anything that you heard from the dissenters that made you think, or indeed from those who held, was there anything that made you think we won't get 6-3 next time, we'll get more dissent, or we'll get more push for a hike next time? I wasn't sure, looking at the detail, whether that kind of messaging was there.
So I think that the dissenters are quite on their own at the moment. The one that would be closest to joining them would probably be Claire Lombardelli, one of the other deputy governors. But she said yesterday that, it wasn't a close call for her. And I think at the moment that the bank are really pretty happy with the way that the data's gone, that there's disinflation, that the signals on inflation expectations look good, that everything that they have to hand at the moment tells them that maybe that risk of second round inflation isn't that big. But the hawks are saying, well, that may be so now, but, this stuff comes later. Isn't this all a bit complacent?
And what's your assessment on second round effects then? Because he also added in that companies they hear from, they're not considering putting up prices anything more than just recouping costs. I mean, what do you think the second round effects will amount to?
I think that they will be quite contained this time, but I also have a lot of sympathy with the hawks who are saying, look, let's not get carried away. Those are risks there. It depends where inflation peaks out. I have inflation at the top, nearly 4%. The bank has it down at 3.2%, so that's quite a big difference. And the consequences of that for inflation expectations could be quite meaningful. So I think that there's risks there. I am pretty reassured by the data of the last month. I think that the fact we haven't seen a lot of pricing power in anything in recent inflation prints, the signals for the year ahead are good. But I also, I do have that sympathy there with the hawks that there are some risks, and it's too early to judge on those. So, look, to the question at the opening, I think the governor does need to keep all those options in play.
Presumably the labour market is the critical factor there.
Yes.
The labour market looks like it's got quite a lot of slack in it. What power does Labour have right now in terms of its ability to say we want higher wages, or are there other factors here like government spending, the shifting of government spending, that is likely to maybe drive that inflation?
So I think that the labour market is absolutely central, and I don't think this is an employees' labour market at the moment. You're just not seeing that in the surveys of pay setting, pay expectations. So that's the thing that would make you reassured on that, certainly. But look, we don't know precisely where the economy will be 6 months from now. I mean, there's some hints in data that there's a little bit of a bounce coming through. That's worth bearing in mind. I mean, look, my feeling is it's, this isn't going to be a big thing. Second round effects aren't going to be a major thing this time. I don't have an enormous amount in the forecast. But,
you get to 4%. You are way off target, though.
It is, and it is a temporary jump, and it is largely energy and food and those things. But when you get towards that point, those risks come front and centre. So the labour market's important. There's other things that are important too. I mean, obviously we're talking about private sector pay. There's a lot of public sector employees. Public sector pay settlements will be important too, and that will determine cash into household pockets. So I think all these things need watching.
We've seen that as crucial, haven't we, that the public sector pay awards in the past. Let me ask you about things that the government is doing. And we have heard from Andy Burnham a story overnight that we've got saying that he's going to give mayors in England a share of the income tax generated in their regions as part of the new drive for more economic and political power to be pushed out of Whitehall, sort of, devolving some of these powers out to the regions, out to city mayors. Now, we don't know a lot of detail, do we, about any of this right now, but I wonder what difference can that kind of policy make? Do you have any expectation? Has work been done on what difference this can make? Because he clearly is counting on this kind of devolution policy to move the dial.
Well, look, I mean, the details are absent, as you say, and it feels as if this, well, we know this is not for now or even for next year. This is, into the future. So I think, for the immediate Bank of England horizon, it's, it's not something that for them to dwell on too much at this point. I think, politically it's obviously very important. I mean, we know from polling how big the cost of living issue is, and, across the UK, the kind of sense of inequity that may be there. So it's, I think it's more probably about the political narrative than necessarily the economics.
OK, so that's about the politics. I mean, Victoria, and not to step too much into the politics, but just thinking about what change we can expect in the economy as a result of the politics. We've heard from Andy Burnham say a few times that he thinks that the model for the UK has been broken over the last 40 years, and he wants to change that. But we don't know a huge amount of what he wants to change it to. Are you anticipating that kind of, he has the latitude to make big changes to the UK's economic model, or will they just be tweaks?
I think it's difficult because every chancellor over recent years has had a very tough set of constraints. And I mean, I come back to this all the time, which is just the difficulty of the fiscal position. That constrains them very much on the kind of tax and spending levers. Obviously, Rachel Reeves had a big go at regulation, deregulation. They've made some progress. There's other things to do there. I think it's very difficult. I think that you're more likely to see things that are perhaps more meaningful for the narrative, but in terms of where that shifts the economic conditions, perhaps that's more incremental.
Nice to see you. Thanks for stopping by to see us.
Thank you.
24 hours for UK policy. Victoria Clark, Chief Economist, joining us from Santander's CIB UK. Coming up, we're going to turn to the geopolitical picture. The US President, Donald Trump, says Hamas will now disarm. More details to follow. We'll do that next. This is Bloomberg.
Welcome back to the opening trade, 8:45 here in London this Friday morning. And we have actually a positive picture for the European equity markets, picking up on the positivity on technology. Media stocks underperforming, but that's sort of stock specific to Universal Media Group. Technology outperforming on the back of, well, today's more positive vibes, shall we say, around the tech trade.
Love some positive vibes going into the weekend. Let's talk about what's happening with the geopolitical story. President Trump says his US-led border peace has reached a deal for Hamas to disarm. There are quite a lot of questions, though, about the extent of the agreement and when it will actually take effect. Let's try and find out some of the key questions that we need to be asking. Abu Omar, Bloomberg Horizons and Middle East Africa anchor, joins us now. So the headline is Hamas is going to give up its arms. How does that actually happen? What do we know about the details of the deal?
Good morning, Guy. Not much is the short answer about this deal. We don't yet have a lot of clarity on what exactly it entails or how Hamas disarms. It's obviously filled with caveats given the history between Hamas and Israel. Now, two things that we know so far is that Hamas did come out through delegates in Al Jazeera and said that it will not disarm as long as Israel is in the Gaza Strip. And so Israel, from Benjamin Netanyahu's government, we haven't heard anything, but it isn't. We're not really clear on whether Israel will agree to pull out of Gaza unless Hamas disarms. And then when it comes to the details of this deal per se, Guy, what we know is that nothing is final, that the discussions can go on for a couple of more weeks, and that the implementation could take up to 350 days. So there's a lot of time for a margin of error to happen there. And then the Board of Peace obviously will include countries in the region. We don't know what shape or what form those countries will take in securing this deal. So in a nutshell, there's a lot of unknowns. President Trump did come out on a post and said that he will require the complete disarmament of Hamas, that this deal will pave the way for a Palestinian Authority to come in Gaza and govern it and give people a better future. And he said that it will be a step towards lasting peace and security. But then when it comes to the response from Israel, we still don't have that yet. We'll obviously follow it and see what the far-right part of that government decides to say about it. And then, as I said, Hamas will not agree unless Israel pulls out, and then it can decide whether to disarm or not.
And Abir, it's been a volatile week for oil prices, of course. We're watching, of course, everything to do with, well, the Red Sea now, but also the Strait of Hormuz, where I see reports that things are slowly picking up. I mean, this can be unwound again, but what's the state of play right now?
Yeah, slowly picking up is the right way to describe it, Anna. And again, the Gaza deal is in the midst of this Iran-US tensions that are happening in the region, that are re-escalating. In the heart of all of this, of course, is the Strait of Hormuz, but not just the Strait of Hormuz, because we're also seeing the Red Sea getting affected or at risk of the Yemeni Houthis attacking it. But as you said, the movement in the Strait of Hormuz is slightly picking up. We reported yesterday that a Qatar LNG ship was able to make its way through the Strait of Hormuz. It was idling around for about 3 weeks, but was able to pass through with its lights turned on. So we're seeing slight movement there, obviously a fraction of what it was before the war and then over the past 2 weeks since the escalations restarted. And then we also reported that Saudi ships, Anna, which have been able to make their way through the Red Sea, Saudi Arabia was resorting to the Red Sea as an ulterior pathway throughout the war, is now going through other pathways in Africa. So you're seeing two waterways at risk now, and we're still monitoring that movement. Again, a little bit more movement, but nothing compared to what it used to be.
Abir, thank you. Bloomberg's Abir Abu Omar. Now, the Spanish government has ordered troops to one of its two North African enclaves after a recent surge in illegal immigrants. The migration crisis risks a flare-up in tensions with leaders across Europe, with Italy's Prime Minister, Giorgia Meloni, threatening to impose travel restrictions on Spain. Let's bring in Bloomberg's chief Europe correspondent, Oliver Crook. Some of the pictures are quite dramatic here, Ollie. How did this enclave, well, remind us of the geography first, and how did this enclave become the centre, the latest centre for the border crisis?
So absolutely. So this is Ceuta, which is Ceuta, I should say, which is right off of the southern tip of Gibraltar, basically just across the border there, basically attached to Morocco. And this is actually only one of two areas of the European Union, both Spanish, that actually border the African continent. And what we've seen over the last week or so is a real increase in illegal crossings into the area by migrants that you can see there on those photos that are actually really very breathtaking, and that really exploded yesterday with effectively them completely losing control of the border. And this is obviously a major concern for the Spanish. We understand that they're going to deploy the military, the army, some of the civil guard, more in police to try to regain control of the area. And we're going to get a visit there, we also expect, from the Prime Minister, Pedro Sanchez, who will be going down to the region, we understand, a little bit later today. Now, this is significant, obviously, for the Spanish. This is something that they're now having to deal with. The reason that the why this is happening now, according to the foreign minister, this all comes down to a court ruling in Spain, which effectively blocked the ability for the Spanish authorities to intercept and send back people immediately. So effectively now, if you do get to Spanish soil from the sea after this court ruling, you sort of suddenly come under all of these sort of protections for human rights and effectively cannot be sent back, which is the reason, at least for now, that the foreign minister has given for the reason that they've seen this massive influx over the couple of days. So for the Spanish, number one priority is going to be regain control of the border, try to figure out what to do with these people. But of course, it sparked some controversy within the European Union. We should say that this is not, the European continent. There is still a good deal of sea between this enclave of Spain and the rest of the continent. So it's really majorly an issue for the Spanish. But of course, this is turning into a political conversation here in Europe.
The Spanish have taken a very different approach to immigration to the rest of Europe, you could argue. And these pictures have been flashed across Europe. They are everywhere, as far as I can tell. You've seen the Italian reaction. Meloni is clearly not happy. What else are we hearing? Is there going to be a change in the kind of the free movement principle that underpins the European Union as a result of this?
Yeah, so what's really interesting here, guys, that obviously you have the socialists from Spain, Pedro Sanchez, and then the right-wing government of Giorgia Meloni that really came into power in a very anti-immigration sort of platform. The Spanish, as you mentioned there, on the other hand, have been very welcoming and trying to increase the numbers of immigrants within Spain. And they've touted that this actually has been a very massive economic success for Spain. And you've seen it in the numbers. They're trying to mostly attract people from Latin America. That being said, the largest proportion within Spain are actually from Morocco. But of course, this turns into the domestic classic debate internally here within Europe, where you basically have the Italians saying that this is the massive problem, this is sort of the migration crisis that we're talking about, and you have Meloni coming out on Twitter saying that the images coming from Ceuta demonstrate the uncontrollable illegal immigration poses the real threat to the security of European borders. We are prepared to take extraordinary measures to defend our borders and ensure safety for our citizens, including the suspension of the Schengen Agreement with Spain. Now, it's not very clear what she's referring to here, so effectively what European nations can do is they can kind of retake control of their borders really at any time and basically impose border checks. This happens very, very routinely. You have the Germans do it, the French do it. The French have basically the ability to do with every bordering country until October because of the concerns that they have over extremism. That is not something terribly new. What it seems like she's trying to imply is that somehow Schengen would get together and basically put Spain on pause. Not really clear if that's something that she would be able to do or there really is any precedent for. But obviously this is a moment for Meloni to sort of score some political points. Obviously this doesn't really pose an imminent threat in terms of immigrants to Italy. It does cause, however, Guy, a really big problem for the Spanish, particularly with this court ruling, to figure out how they're going to deal with these thousands of people in the next weeks and months.
Ollie, thank you very much indeed. Oliver Crook, our chief Europe correspondent, updating us on the immigration story. Let's talk about another challenge that Europe faces right now, and a big one. A group of scientists now warning that the risk of extreme fires is growing. The climate is warming, seems to be the sense, and you are going to, no more normal summers. You're going to see a lot of extreme weather, and that seems to be the narrative that is emerging very, very quickly. The World Weather Attribution Group says climate change is making fires twice as likely in France, and get this, 20 times as likely in Spain. The alert comes after flames consumed obviously hundreds of square miles near Bordeaux and Madrid over the last few days. Joe Wirtz is our climate reporter and joins us now. For context, how extreme is what we're seeing in places like Spain and France right now relative to recent history?
Yeah, this is really a new era of wildfires. We're seeing intense, fast-moving mega fires. In some cases, these are fires that are so intense they're warping the weather around them, creating their own weather systems. These are firestorms, the dangerous, extreme fire behavior where the fire's moving and spreading rapidly. These firestorms create these powerful downdrafts that can spread the flames further and also hamper the response. Right now, we're seeing strong winds in Greece and Crete that both spreads the flames, fans the flames, and hampers the wildfire fighting effort. You can't take up planes or helicopters or do these aerial drops that we've seen. It's really hard to do when the winds are gusting this strong.
And the climate is having another impact on our ability to create energy, and that is around river levels.
Yes.
So the heat has seen water levels drop in the Danube and the Rhine, and that means in some parts of Europe, that creates problems for generating electricity from some sources. Run us through how significant that is.
Sure. Yeah, we've seen record low river levels in the Danube and critically low levels in the Rhine. Hungary has had to take emergency measures to shore up its only nuclear plant there. It uses these rivers for cooling, and the river levels drop too low. It threatens that cooling supply. They've had to roll out these special floating pumps to secure the water that they need to keep those plants cool. It's also affected the amount of energy fuel that they can transport on the rivers. When the river levels get low, you can't move as much cargo on those ships. And so we've seen a real bottleneck of shipping through those rivers there.
Joe, thank you very much. Bloomberg climate reporter Joe Wirtz bringing us, ahead of the weekend. There we go, some sobering messages.
You'd be delighted to know the football starts again this weekend.
Excellent, good.
Just because obviously the World Cup wasn't enough.
Yes, we need more football in our lives.
OK, that's what's happening this weekend. What's happening next is The Pulse. I will leave you in the capable hands of Francine Lacroix. Enjoy the weekend. This is Bloomberg.